Hey guys, Joseph James here once again with the newsletter brought to you by theschooloftrade.com. Today was September 16th, 2009, making our way through the month of September, guys. Another winning day here in the room. Before we talk about the live trades we took in our trade room today, I want to remind you guys about our free resource we have online. Check out our YouTube page /School of Trade. And guys, when you're here, please rate and comment on this video, and don't forget to subscribe to our YouTube page so you always know whenever our new videos are posted. Another winning day here today. Now, I gave a little bit of money back to the market towards the end of the morning, but not too bad. I brought in about $200 in my account this morning here. That brings our total this week to $780, and of course our monthly total to $1590. We'll keep you guys posted as we work our way through the month of September. Now, the term of the day today is sentiment, or market sentiment. Now, what exactly does this term mean, and how do we use it to make money? The term sentiment is the overall opinion of the market by the mass majority of the participants in that specific market. So if we see bullish sentiment on the euro, that means that overall the majority of the people who are trading the euro are looking to the long side, right? They are bullish in nature. So you may hear me say things like sentiment is bullish because we can see more buyers than sellers at a specific level of resistance. Now, of course, market sentiment will use things such as price action, candlestick patterns, momentum indicators, and of course other technical indicators that we can use that will define this stuff for us. So what exactly are we watching for? For me to define market sentiment, we watch for basically three main functions here. The first one is the most important, and this is price action. I'm watching things like my time and sales window. And also, just importantly, I'm watching my pace of the tape indicator, that proprietary indicator that's available to our lifetime members. Right? I'm watching very closely how does price react around support and resistance. If we see lots of buyers at overhead resistance, that tells us that we are probably going to see that resistance being broken through. These participants, how they react around these levels, are going to tell us a story. That story is all played out on our time and sales window, watching the trades back and forth as the buyers and sellers compete for control over price. Are the moves seeing follow through? In other words, when we see price move up, is it moving up by just 1 or 2 ticks and then rolling back over? Or is it moving up 1 or 2 ticks and then exploding 10, 15, 20 more ticks, right? That's what we call follow through. If I'm seeing price without follow through, that means it's a very choppy, up and down, very sideways price action. Then of course that tells me that there is no sentiment to the upside or to the downside. So if I'm seeing new highs that are quickly being brought back down by sellers, if I'm seeing new lows that are quickly being protected by the buyers, that again, watching price action will tell us if we see no follow through, right? That follow through will confirm the sentiment in that direction. Now don't forget, when it comes to your tape reading skills while you're developing them, you have a great tool with us called our pace of the tape indicator. The pace of the tape indicator is a speedometer of our time and sales window. Now the speedometer, as you can tell, come out and join us in our trade room, we'll show you guys in real time, is going to be a great tool for identifying patterns. So I'm going to show you guys a pattern on this in just a second on the crude market that we used this morning by using our pace of the tape, so make sure to stay tuned on that. We also use momentum. Momentum is another technical indicator. It's an oscillator. It's very widely available to pretty much any charting package out there. We want to make sure momentum is moving with price. So momentum will basically confirm the overall sentiment. So if price is moving up and momentum confirms moving up, then we know the sentiment is up. If the price is moving down and momentum, of course, is pointing up, that is called divergence. Price goes down, momentum goes up. It's called divergence, right? They're not pointing in the right direction. That's a red flag. That's a sign that, hey, we may not be too sure about the overall sentiment. So look for momentum to line up with the price action, and that will confirm your sentiment direction. Now, last but not least, we also use a very important tool called Market Profile. Now, we don't touch base on Market Profile very much in our live trade room. We reserve that for our members and our free webinars on Tuesdays and Thursdays. We're going to use Market Profile, and again, if you want to know more information about Market Profile, come join us on Tuesdays and Thursdays at 11:30 a.m. Eastern Time, and we go over Market Profile in great detail in our webinars. We're looking at Market Profile and trying to decide what the overall sentiment is. We're going to use the Market Profile value area bracket, and we're going to compare where current price is to where the bracket is. Now, if you're familiar with Market Profile uses volume, and it defines what the previous day's participants had deemed being a acceptable bracket to do business in. So the value area bracket from yesterday, I'm going to use that value area bracket to identify overall market sentiment by comparing current price to what that value area bracket is from yesterday. And again, for more information about Market Profile, come out and join us in our live trade room, and we'll go over it in our free webinars at 11:30 Eastern Time on Tuesdays and Thursdays. Let's keep moving, guys. Want to remind you to come out and join us tomorrow morning. Our beginner's course, if you're coming out to join us tomorrow morning, our beginner's course is highly recommended. It's going to give you a firm foundation to build on as you learn our methodology in our live trade room. Our trade room opens up at 2:45 a.m. Eastern Standard Time. It's open to everybody, guys. So come out and we'll show you guys live in real time how we use our 3 jobs: identify, adjust, and execute. And of course, we're going to show you guys how to use our mechanical rules, follow those rules specifically, and let the rules do your trading. Let's take a look at some of the trades we took today. Now here on Crude, this is a great example of market sentiment. Now you'll notice price moving up, speed of the tape was moving up. Price on the left-hand side on my faster time frame is moving up. And when you look in the lower right-hand corner, we can see by our pace of the tape indicator that the pace of the tape was moving up. So in this sense, the speed of the tape increases as the price increases. That confirms the people in the market are interested in buying. Now, if price was moving up when the speed of the tape was moving down, that means slower price action as the buyers hit the tape. That means there are going to be fewer and fewer people to the upside. So if we see price moving up, but the speed of the tape moves down, that of course gives the heads up that sentiment is not defined here, and we want to stay away from that trade. Once again, guys, this trade here, we'll zoom in for you guys here at 9:08 this morning on the Crude. This was a breaker long at 70.79. Great trade, and of course, got into this trade +4, +8, and +12 ticks for a total there of 28 ticks. At 10 bucks a tick, guys, it brings in 280 bucks there on one trade this morning. This was a great example here, guys. Another example of how we're able to manage our trades to maximize profit. That runner of 12 ticks there obviously puts a lot more money in our pocket than just getting the first 2 targets filled. So we're seeing volume come back here in a market like the Crude this morning. We're back to our old tricks again, making that great money every day consistently here in the market. What got us into this trade? You know what got us in, right? The pace of the tape indicator. The pace of the tape indicator is a proprietary indicator that is the speedometer of our time and sales window. And when you look to the lower right hand corner of this slide here, you'll see, of course, at this time, right, just before 9:08, we saw a dramatic increase in the speed of the tape. That gave us everything we needed to know about getting into this trade. Again, 9:08, guys, just at 9 o'clock. This is our first 28 ticks here in the market. Now, we took one more trade here a little bit later on in the morning, just before 11 o'clock this morning, gave a little bit of it back. Now, this is a great example here today, guys, of how a true methodology is going to show you how to cut your losses early and let your winners run. Remember back on that first trade, we managed our trade properly to maximize that profit, and we got pretty much every tick out of the market that we could, right? 280 bucks worth of money, worth of profit there out of the Crude in that first trade. Now, this is another example here, guys, of how we've got to cut our losses early. As soon as you guys learn to cut your losses early, maximize your winners, right, you're going to do very well as a day trader. Now, this is a great example here. We got in here at 10:54 on the Crude again, a breaker long. Now, this is a breaker pattern, meaning we're trading with the trend. This breaker long entry was at 71.56. I'm sorry, excuse me, 71.65. Now, in this case, this was a classic early exit. We saw momentum curl against us, right? You can see all the way down the bottom of your screen here, momentum is curled against us. So momentum curled against us. Price action slowed down, went from yellow back down to red pace of the tape bars. And again, like I said, a classic early exit example. We get into the market. We quickly see that the market's not going our direction. I'm watching technical indicators to tell me to get out early. And of course, this is one of the benefits of having a set of rules that not only tell you when to get in, but how to get in, what to do to get in, and most importantly, when to get out early, right? What to do if something goes wrong. If I'm not prepared to get out of this trade early, guys, I'm virtually at the mercy of the market. When we see things like this, the momentum curl, price action slow down, that's all I need to get out of this trade. And as you guys can see, save me some good money there on that potentially disastrous position there that we had. Keeping the money in my account and giving me another chance to get another winning trade today. Let's recap. Our room opens up tomorrow morning, guys, at 2:45. Tomorrow morning, Eastern Standard Time. Come out and join us. We do free webinars on Tuesdays and Thursdays at 11:30, so be sure to be here for that tomorrow, Thursday, 11:30 a.m. Eastern Time. The beginner's course is highly recommended for all free trial members. We'll give you free 3 weeks. Come out and join us, guys, as part of our free trial. You're going to see the market a completely different way, guys, I guarantee. Please take a minute to rate and comment on this video. And for more information on lifetime membership, drop us an email, sales@schooloftrade.com. My name is Joseph James. Hope the video helps. We'll see you guys in the room tomorrow. Bye-bye for now.